Hi, welcome to Nifty Das. From today, I am starting a new video series called Candlesticks and Price Action. This can be the best video series on YouTube for 3 reasons. Number 1, you will learn everything in most easiest language possible. Number 2, you will learn many additional information which only a trader can tell you. Number 3, all videos will be practical oriented. All videos on this channel are available in 3 languages: English, Hindi and Bengali. So please watch in the language you are most comfortable in. So let's start. So for price action, you have to learn the OHLC. What is OHLC? O stands for open, H for high, L for low and C for close. For any trading instrument, be it stock, commodity, future, option, there has to be OHLC data. From OHLC data, you can gather many information. Let's see. So we have two stocks, stocks A and stock B. So for stock A, the open price is 100, high price is 110, low price is 95 and close price is 105. So what we can learn from OHLC? Number 1, the stock A closed at 105, which is 5% higher at the end of the day. Number 2, the sentiment is bullish since it closed higher. Number 3, the volatility of stock A is 15%, which is given by high price 110 minus low price 95, that is 15 points, and 15 divided by open price 100 into 100 is 15%. So the stock A has the intraday volatility of 15%. In real life, you don't get this volatility, but this is just an example to clear the concept. Now for stock B, which has the open price of 200, high price 240, low price 180 and close at 190. So for stock B, we can understand number 1, it closed 10 points or 5% lower at the end of the day. So number 1, the sentiment is bearish. Number 2, it closed 5% lower. Number 3, the intraday volatility is 240, that is high price minus low 180, 60 points divided by open price 200 into 100, that is 30%. So third point is the volatility of stock B is double of stock A. So if you sell option for stock B, you will get more premium because it has high volatility. So by simple OHLC data, you can gather lots of information, but by using candlestick, you can get more additional information. I will tell you later. So in real life, we traders don't use the raw OHLC data. Of course, you can find that, but we traders use some form of visual information to form the trading logic. Most popular is number 2. One is bar chart, second is candlestick chart. Candlestick is more powerful. You will learn why later in this video. So first, let's plot it on a bar. So on the left hand side, this is the bar, and you can see it looks like a bar, and the left bar denotes the open price and the right bar denotes the closing price. Since closing is higher than the open, so the right bar is above or top of the left bar. Number 1. Number 2, the complete bar represents the whole day's price action. Top of the bar represents high price and bottom of the bar represents low price. Now let's move to candlestick. And since the closing is higher than the open, so the color of the bar will be green, indicating bullish sentiment. Now let's move to candlestick. So on candlestick, this part, the solid part is called the body. So for the stock A, the closing is higher than the open, so the sentiment is bullish. The color of the candle will be green. And for green candle, the bottom body represents the open price and the top body represents the closing price, and the upper wick denotes the high price and the lower wick denotes the low price. Now let's plot the stock B. For stock B, this is the bar. Since the closing price is lower than the open price, sentiment is bearish, hence the color of the bar is red. And since closing is lower, so the right bar will be lower or below than the left bar. Top of the bar represents high price and bottom of the bar represents low price. Here you can see the difference between the close and the low is 10 points. So this part is 10 and the difference between open and high price is 40 points. So the top part represents 40 points. In picture it may not be so clear, but you can understand the logic. Now let us draw the candle. So since closing price is lower than the open price, sentiment is bearish, so color of the candle will be red. And for red candle, the top represents the open price and bottom represents the closing price. Remember, for green candle, bottom represents open and top represents close, but in red candle it is just opposite. Now the upper wick denotes the difference between open and high, and bottom wick represents the difference between close and the low. So you can see the bottom wick length is 10 points and the upper wick length is 40 points. Now why the candlestick is more powerful? Because you can see the length of the bottom wick is 10 points. That means the bears or the sellers tried to push the stock down, but they could make it down only by 10 points. But the bulls or buyers tried to push the stock higher and they could push the stock higher by 40 points. So although at the end of the day the stock closed lower, but since the power of the bull is more than the bears, so in coming days the stock can again return to bullish momentum. That is the power of candlestick. These are symmetric candles where the length of the upper and bottom wick are same, but in stock B it is not symmetric candle, it is asymmetric candle, since the upper wick length is more than the lower wick length. Later we will learn about candlestick patterns. By following candlestick patterns you can take high probability trade. Remember, in trading there is only two ways to make money. Number one, taking high probability trade. That means if you take 100 trades and you got right in 70 trades, so your probability is 70%, which is greater than 50 and is high probability. And let us say in 70 winning trades you win 10 points or 10 rupees, and in 30 losing trades you lose 10 rupees. So in 70 winning trades you earn 70 into 10, 700 rupees. In 30 losing trades you lose 30 into 10, 300 rupees. So after end of 100 trades your net return is 700 minus 300, that is 400. Now your original capital was 100 rupees and on that you are losing either 10% plus or 10% minus. So at the end of 100 trades your net return is 400, which is 4 times of your capital, that is 400% return. That is the power of high probability trade. This only a trader can tell you. I hope this is useful for you. If yes, please like the video. Now second secret is taking high reward to risk ratio. What is that? Let's say your probability is only 50%. In 50 trades you are right, in 50 trades you are wrong, but in 50 right trades you win 10 rupees and in 50 wrong trades you lose not 10 but only 5 rupees. Now after end of 100 trades, by 50 winning trades you are earning 50 into 10, that is 500 rupees, and in 50 losing trade you lose 50 into 5, 250 rupees. So finally your return is 500 minus 250, that is 250 rupees, and your original capital is 100 rupees. So your net return is 500 minus 250, that is 250 rupees. So although your probability is only 50%, still you are earning 250 rupees or 2.5 times return on your capital, or 250% return on your capital. That is the power of high reward to risk ratio or high RR ratio. Now if you combine both high probability and high RR ratio trade, then definitely at the end of 100 trades you will make money, but you have to be disciplined to follow the rule. So please like the video if this information is useful for you. Now let's continue. Now if you plot multiple bars, you will get a bar chart like this one, and this is line chart where instead of OHLC we only plot the closing price of the day using a dot, and by connecting multiple dots over a period of time you will get a line. This is called line chart, which is not so popular. And Zerodha or any other trading platform provide you multiple charting techniques like candle, bar, colored bar and so on. So that's it for now. How was the video? Let me know in the comments below. If you like the video, please like it and share it with your friends and family and your trading peers. That will be really helpful. I will be looking for your comments. So see you in next time. Thank you for watching.